In this video, I'm going to run you through my A to Z guide for you to pay 0% tax as an online business owner so that you can keep 100% of what you earn whilst traveling the world and having complete peace of mind that you are 100% compliant. Now, before I tell you exactly how to pay 0% tax, let me introduce myself. My name's Lewis Slennert, I'm a chartered accountant and I work with online business owners globally to legally minimize their tax and build real long-term wealth. Now, 2 years ago, I was in the UK, corporate job, comfortable life, doing well on paper, but I always knew in the back of my mind that if I didn't take a risk, I'd regret it for the rest of my life. So I quit. I packed my bag and I moved to Thailand with no connections, no business plan, just a laptop and enough money to figure something out. Now today, my life looks very different. I have complete freedom over my time, location and money, and I genuinely don't think that would have happened if I didn't make that move. Now maybe you haven't made the jump yet, or you could already be scaling your business whilst living abroad. But the truth is, until you implement what I show you in this video, you will never become truly free, because unless you set things up properly, you will remain tied to your home country and still be liable to paying up to 40 to 50% of everything you earn to the taxman, even if you're no longer living there. And the craziest part is that I have met so many business owners that think they're compliant. Maybe they even got a quick setup company in Dubai, only to find years later that they've been quietly building up a tax bill without even knowing. And it's all because they only implemented half of what was required. So make sure you watch this video all the way through, because this is not something you want to take half measures on. So let's get into it. Becoming tax-free comes down to 3 key phases. Phase 1 is to audit your situation. Now here's where most people get it wrong. They go for one of the quick setup companies, promising to set you up in Dubai within 2 weeks. It seems straightforward, maybe even easy, until they return home years later to find a surprise letter from the taxman. And the reason this happens is because tax residency isn't determined by where your company is. It's determined by your life. In the UK, your tax residency is assessed using the statutory residency test. Now this looks at days spent in the UK, where your home is, where your work is, your family ties and your accommodation ties. Now this is what HMRC uses to decide what tax you owe, not where your company is registered, your actual life. And this is why cookie cutter setups fail, because no one took the time to understand your lifestyle, your ties to your home country, and how your business operates. So it looks good on paper, but it doesn't hold up when your actual lifestyle is tested against it. So instead of jumping straight into a setup, get professional advice on your position first. This is something you want to be absolutely crystal clear on, because if part of this is wrong, everything that follows is built on the wrong foundation. And that's when people end up dealing with problems years later that could have been avoided. Now, once you've had clarity on your situation and how much tax you should really be paying, it's time to move on to step number 2, which is to structure things properly. And this is where most people assume there's only one option, Dubai. But the reality is, you can live in multiple countries and pay 0% or very little tax if structured correctly. The key isn't chasing a country, it's designing a structure around your lifestyle, your travel plans, your income, and your long-term plans. So instead of copying someone else's structure, build something that is actually designed on how you want to live and to operate. Because this isn't just a company registration, it's a framework that your income, tax, and residency sit inside. And when it's done properly, it holds up long term, not just on paper. Now step 3 is staying compliant, not just on paper. Now this is the part that almost everyone ignores. If you've already been set up overseas and your advisor isn't helping you maintain this, then that's a massive red flag. Because unless you're updating your position every single year, your tax setup can slowly become redundant without you even realizing it. And you can be liable to tax in your home country again, even though you think everything else is set up correctly. So don't treat this like a one-time setup. This needs reviewing and it needs to be handled properly every single year, because the moment this drifts, you can fall back into tax exposure without even realizing. So now you understand how this works in theory. The next question is, how do you actually implement it? Because understanding the structure is one thing, applying it properly is another. So here's what it looks like in practice. How many days can you spend back home? The amount of time you can spend back in the UK depends entirely on your ties and residency position. There isn't one universal number. For example, in the UK, this is assessed under the SRT, which looks at how many days you can spend there, whether you have accommodation available, whether you work there, and what other ties you maintain. So before anyone gives you a magic number, your full position needs to be reviewed properly. Now, how much do I need to earn to do this? Most people think that you need to be earning multiple six figures to become tax-free. That is not the case. The truth is, if you're earning anything in the 5 to 10k region, going 0% tax becomes very attractive, because even if you're only earning 10k per month, you will immediately start saving thousands of pounds every single month, which means that most people that do this see a 10x ROI within 3 to 6 months from implementation. Now, is this actually safe? Yes, this is 100% safe when it's done properly, because you're following the rules that already exist. This isn't about loopholes. This is about structuring yourself correctly within the law. The risk only comes when people implement half of the process or rely on generic setups without reviewing the actual ties. Now, what happens if you want to move back to your home country? Now, not everyone wants to live overseas permanently, and your plans can always change. So we always make sure to plan this in from the very beginning to give you full flexibility and control over your situation. So at this point, if you're serious about doing this properly, the next step isn't guessing, it's understanding your own position clearly. Now, this is why I built my free tax checker, so you can go through it in under 60 seconds, and it will give you a high level indication of your current position, what you might be overpaying, and whether 0% tax is realistic for you. The link is in the description of this video if you want to check this out, and I will see you next time.